You are listening to chartingwealth.com for Wednesday, the 13th of January, 2016. We always start with the total market, what it is up to, and what do we see as we glance at our charts? Well, the market originally crossed over the total market as represented by IYY, an exchange traded fund. That is a total market index fund showing all the stocks. What do we see happening? Market crossed over going down back in December the 2nd, right at the end of November. Moved down until about the 14th, then sort of slid sideways and then started the big drop. On the 4th of January, it's reflected in our two-day candle of the 5th, the 7th, the 11th, and then the 12th. That candle has not finished yet. That is a two-day candle in progress. What do we see going on? Well, we still see our price action well below our two-day candle trend line that's now representing about 8 days and really been going down now close to 10 days. Lots of down movement in the market. What is actually causing all of that to go on? Well, a lot of different things. If we look at the intraday, what's been happening throughout the course of the day, the market has really just slid sideways. If you hear people saying, oh, the market's up 0.67% for the day. Well, technically, yes, but what does that really look like? Well, the up movement is totally contained within the down movement of Monday afternoon. Okay, so we're not talking about the market has turned around. Now, maybe we're going to see it digest all these losses and bottom out for a little while and perhaps move up. If it moves up above our two-day trend line that we have depicted on our chart, in the 4-hour movement, then of course we'll pay attention to that, and that might tell us that the big down move is over. I'm not going to make that broadcast at all at this point. What I'm really hoping will happen is that what we'll see occur is there'll be a tick over in the 4-hour chart. It'll move up for a little bit, and then when it rolls back over the second time, I'm going to look to get into that and write it down. When you say write it down, how do you do that? Well, you do a virtual trade in something like an inverse fund for the total market or the S&P or the Qs, depending on what you might be investing in. Now, what are the S&P and the Qs? The S&P is the S&P 500. The Qs is the NASDAQ 100. We'll get to those charts in just a minute. Going to revert back out on my charts to the two-day chart. Going to look at the SPY, which represents Standard & Poor's 500. We have a green up candle on the two-day chart. It was actually up technically 0.81% for the day. Still not above the two-day trend line that's connecting at least 3 candles, representing 6 days of movement. So one up day does not mean the market has turned around. If we drop back and look at the 4-hour chart, what do we see? Well, again, the same sideways sliding that we saw yesterday that we saw in the IYY, and yesterday afternoon, all that movement is totally contained within the down candle from just the afternoon of Monday. So again, don't have a crossover going up on our moving average convergence divergence, still in the red on our derivative oscillator. Those are two indicators that we look at, the biggest one being the MACD. The moving average convergence divergence indicator is depicted by a blue line on our charts, and it's not crossed our red signal line. That signal line tells us that things are a-changing, and that has not happened yet. Still well below our two-day trend line, so we're still in confirmed down moves on our big chart on the S&P and the small chart, that is the two-day and the half-day. Same on the IYY. Now, if we revert back to our two-day chart and we check out our last index before we go to gold, that is the Qs. I said just a few minutes ago, QQQ is the symbol. What does it represent? Well, it represents the NASDAQ 100. The technology stocks look somewhat similar as far as a green up candle on the, and again, just the half of the two-day candle. We've not completed this candle yet. That won't be completed until we roll into the 13th. But what do we have going on? We have 3 down candles, and our movement is still below that price movement. So we're still below the two-day trend line. If we revert back to our 4-hour chart, what do we see? Well, we see actually more up movement pretty good up movement as far as not quite above where the market started going down on Monday. So the Tuesday climb was okay. It was actually up 1.16%, but still haven't had a crossover going up. Derivative oscillator hasn't crossed over. If we see that happen, does that mean we get in an up trade? Absolutely not. Why? Because our big chart, the 2-day chart, is still going down. Until that crosses over, you never have a confirmed up trade. What are we looking for? Well, what we hope might occur is that there's going to be a time period where the market digests the losses, and maybe the market ticks up a little bit. And then after all of that action's over with, it rolls back down again, crosses over going down, as it did back at the morning of January the 4th, and you're able to get in and follow the play that's already being depicted by the big wave, which is the 2-day chart. That's how you do it. That's what's so beautiful about being a non-professional investor. I don't want to say amateur, not professional investors, professional traders have to trade. I mean, if you're a market maker, if you're out there and you're a professional investor, you've got to buy and sell things. Well, guess what? We don't. We can stay in cash in our virtual accounts. And the reason I keep using the word virtual is we're an education service. We're not a stock calling service. We're not giving you trading or investing advice. We're talking to you about learning how to trade. So what? We don't have to go buy anything in the market any day. We can stay safe and stay in cash until we feel like there is something that we feel most positive about. First thing you want to do is preserve your capital. Then you want to think about earning money on that capital. So you got to be very, very careful in that regard. Lastly, let's range. We're already ranged out on our 2-day chart. We're going to go to gold. What did gold do today? Well, as the markets went up, gold went down. We have a 2-day trend line that we drew connecting 2 candles, passed through that going down today. Gold was officially down just a little over 0.5% for the day. Our Bollinger Bands are depicted on our charts by dashed blue lines. Bollinger Bands are basically volatility bands. They're like rubber bands, and as the candles, as the price movement goes around, the more the price movement's up and down, the wider the volatility is. And volatility is literally just movement. So the more movement you have, the further apart, as would make sense with volatility bands, are the Bollinger Bands. The less movement you have, the more the market slides sideways, the tighter they get. And that's what we have seen happen over the last few days on the 2-day chart. So gold is still in a confirmed up move on the 2-day chart, but a down 2-day candle for gold. If we revert to our 4-hour chart, what do we see happening? Well, our 4-hour chart started working again around the 4th. It was a nice chart. If you had jumped into gold after it crossed over on that 4-hour chart in the afternoon of the 4th, you would have done quite well as gold accelerated up. It's now crossed over going down. Let's keep an eye. It has also crossed over the 2-day trend line going down. All that happened at the same time. We saw our MACD crossover going down. We saw our derivative oscillator crossover going down. And we saw the 2-day trend line breached. That typically in charting is a sign that that movement will be sustained. That means gold will continue to move down. Now, gold is still showing green on the 2-day candle, but it has crossed over on the 4-hour chart, which is our favorite chart. It is still technically in an up move on the 2-day chart, which has not been all that helpful to us over the last many months. So gold we have treated a little differently than the indexes when it comes to the 2-day chart. We've not waited for that to cross over. We've been able to count on our 4-hour chart until it betrayed us back in December. And when we look at our 4-hour chart, we can actually see where it started, as the market started sliding sideways, our 4-hour chart did not work for us because the MACD, which is our main indicator that we use, does not work well in a sliding sideways market. But once gold cleared and started some clear up moves, of course it started working again. We don't trust it yet because it has not been helpful to us over the last many weeks, but maybe we can start trusting it again. That's something I'm hopeful, because it was so sweet to watch how accurate our 4-hour chart had been over many, many months. Well, folks, that is where we end up the markets on a Tuesday as we get into Wednesday, the 13th of January 2016. Thank you so much for listening. We love to hear from you if you have questions, concerns, training that you are interested in receiving that you've not found on our website or channel. We would love to hear from you. Chartingwealth.com. Remember, sign up for our daily newsletter that includes this podcast, both video and audio, whichever one is most helpful to you. You can also subscribe at iTunes. You also will receive, for signing up, putting your email address in, you will receive the latest version of our stock charting layout. It's found at freestockcharts.com, but you have to have the layout. Otherwise, you'd have to create your own, and we've got a pretty darn good layout that I'm quite proud of. Additionally, you'll get the link to our 15-minute How to Read a Stock Chart video, which is your key to starting to figure out what's really going on. You can listen to those talking heads, but you notice that one day they say one thing, the next day they say another. As they say in the market, you buy on the rumor and sell on the news. Well, do you think you're going to hear the rumors? No, you're going to hear the news. What we pay attention to is what our charts are telling us, which can be as good or better than rumors. Thanks so much for joining us. We appreciate you listening, participating, from chartingwealth.com.